You do not need employment history to get approved for a mortgage. You can get approved for a mortgage even if you just started your job yesterday. As long as you can get a job letter confirming income, we can use that for qualifying. Are you self-employed and you don't pay yourself a whole lot of income, or maybe your taxes are behind? There are programs out there called stated income mortgage programs where we use your business bank account statements to qualify you for a mortgage. Do you know you can qualify as a first-time home buyer even if you've owned a home before? If it's been at least 4 years since you owned your last home, you can qualify as a first-time home buyer. Do you know a $500,000 mortgage at 2% interest rate has about the same monthly payment as a $400,000 mortgage with a 4% interest rate? So those folks that waited for the market to cool thinking homes would be more affordable, a lot of times we're finding that their carrying costs, although home prices have come down, because rates have gone up so much, their carrying costs have actually increased. You can knock over 3 years off the time it'll take to pay off your mortgage and save tens of thousands in interest just by changing your mortgage payment from monthly to accelerated bi-weekly. The minimum down payment on a 1 or 2 unit property is 5%. The minimum down payment on a 3 or 4 unit property is 10%, as long as you're going to occupy one of the units in either of those two properties. But for a full investment property, a full-on rental property, minimum down payment is 20%. If you are on maternity or paternity leave, as long as you can get a job letter confirming your return to work date and what income you're going to be returning to, with most banks and lenders, we can use 100% of that income to qualify for that mortgage. I always recommend a 30-year amortization for all of my clients. As long as they're putting at least 20% down, 30-year amortizations are available in the majority of situations. It's always good to keep your contractual payments as low as possible, just in case, but you can always voluntarily increase your payments to match that even of a 25-year amortization if you want to, but you can do it voluntarily with most banks and lenders because they have very generous prepayment allowances. Do you know not all variable rate mortgages have fluctuating payments? With some variable rate mortgage products, if interest rates go up or down, the payment fluctuates. But for those folks who prefer consistent static payments, there actually is variable rate products out there where the payment remains static. If rates go up, it just means more of your payment is going to interest and less is going to principal. So if you're someone who likes the idea of the lower variable rate option, but you don't like the idea of fluctuating payments, talk to your mortgage broker about what options may be available to you. Do you know any equity you pull out of your home in a refinance is tax-free money? It's considered a loan, not income, so you don't pay income tax on it. If you have a question I didn't address, feel free to reach out anytime.